Hello, 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 everyone. Mike Arnold here, co-founder, Path Trading Partners, along with Bob Iacchino, who will be on very shortly to talk about some things. Hopefully, you tuned in this morning. I talked about that breakdown possibly not being real. What was real with the trading action, but reversing and not, once we get the break and retest and we got that snapback. So hopefully, some of you were able to take advantage of that. By the way, if you are new here, please do consider subscribing, ringing that bell, and hitting the like button. Longer term subscribers, please leave some comments and like the videos. So, big thing this afternoon was consumer credit coming out. A big increase in that. We just got the crude oil stock change. Looks like a build versus a draw. So, pretty decent rally today. Pretty decent snapback rally. Again, we still have the doubles in play. Other than that, FOMC next week, still at that 50 basis point and still in negative gamma territory. After the close today, not much that I was watching at, very quiet. And tomorrow, I'll just, for inflationary stuff, I'll see what Campbell says. But other than that, nothing big on my radar screen. So let me just hit the magic Bob button and bring Bob on after I say hi to a couple people. Hey, Waka Waka. Hey, John A. Doing okay? Good day, Davey. Hello, Patrick. Hello, Jake. Let me get to Jake. Howdy, Brian. Some good scalps in all the bounces. There are some good intraday reversal patterns, too. How long are we in consolidating or this range in BTC? We can look at BTC after. I told you what my breakdown level is before. Last push up got me, though, expected to tank. Bear trap. Good evening, Anissa. With that, all right, got through that. I'm bringing on Bob. There you go. There's Bob.
I'm laughing at a couple things. Bear trap, number one, made me laugh. And then the phrase from John A, how long are we in this consolidation range? I'm going to say another 2 weeks, 7 hours, and 46 minutes. That's how long it's going to be.
No seconds.
We don't know, John. Follow the price action, man. When the price action tells you we're out, we're out. Whether it's a day or a month or a year, when the price action tells you we're out, we're out. It's very much like watching a tropical depression here in Florida sit above us. You say, well, when's it going to go away? Well, when it goes away isn't when it's going to go away. It's very, very difficult to predict timing on these kinds of things. Which brings me to the double that you have up here, which has not stopped out. I'm not wrong on that, right, Mike?
Nope. And I was talking about the potential double top in the NASDAQ, and I said this morning, I'm only going to be trading it on the closing basis and the intraday if it broke and then rolled over from that price level, because I thought it was going to suck people in. It was going to be one of those, let's just do a flush out move, and then,
Yeah.
and then up we went.
Well, it's funny because, again, and John A., I'm not picking on you. We get this kind of thing all the time where people say, when is this going to happen? I had a client / friend ask me the day that we broke out of the double, can I buy yet? And I said, yes, now you can buy. I said, we got a high probability of it going, I think I told him 42.40 in the S&P. I don't remember exactly the level I told him. He decided to buy QQQs. He bought them at 310. I told him his level in the Q. I actually told him his level in the NASDAQ. What is it? A QQQ, Mike?
What? We have a double in the QQQs.
All right.
The
What's
first
the
target is
stop
317.
level on a close below? What's the stop level on a close below there?
The close below stop level is down at 293.
All right. I told him 296, but that's okay. We haven't been there either yet. And he just keeps texting me every single day, when are we going to go up? When are we going to go up? And I said, well, I'll tell you what. Here's what I can tell you. Here's where you should not count on us going up anymore. And I told him 296. He's like, well, when are we going to get to 296? I have no idea. No clue. Right? So from that perspective, timing is we can make speculation on timing, but we can't really put any percentages in probability on timing. Something else I wanted to talk about today in the World Bank forecast came out today, and they basically slashed their growth forecasts. They essentially said that it's going to be very difficult to avoid a recession, and there's going to be countries, and they mentioned the U.S. by name, that would likely experience a period of stagflation. Now, it's interesting. The head of the World Bank, his name escapes me right now, but he used to be a pretty influential fund manager. So I should say analyst. I don't know that he was ever a fund manager. I want to get his head or his name out here. His name is, you'll know the name, Mike, when I say it. Where is he? Right here. David Malpass. So David Malpass is a pretty widely known analyst, and then he became he was a bank analyst, and he's head of the First Bank. So, or I'm sorry, head of the World Bank now. And he basically got offended by a Financial Times piece that said he was a doom and gloomer. And he basically, because he was an actual bank analyst, he just came out and said, this is what our expectation is, and it could change. Right. So that's really a lot of what we're doing with price action is this is our expectation and it could change. And so he got a lot of flack for that, but it's just another indication of how bad things are. I was just reading an article right here. I still like to print things out, but Sonali Basak wrote it on Bloomberg. Mark Spitznagel is he's a University Investments founder, Universia. Sorry, it's not a university endowment. University Investments is basically a true hedge fund, okay? They don't try to outperform markets by putting on risky bets. They try to hedge for people, okay? They try to make reasonable returns while hedging downside. And the quote in here, if this credit bubble ever pops, it's going to be the most catastrophic market failure that anyone has ever read about. But let's hope that doesn't happen. So I think when Mike and I talk about the big one that's probably not coming in the next recession, I think that's what Mark is talking about in this article that you can find on Bloomberg. So those are a couple of things I wanted to throw out. You guys, crude oil to pop today. It's the highest settlement that we got in crude oil since I think March 8th, which would have been the day of the pop to 130.50. Might have been March 7th, somewhere in that range. But today's the highest actual close. Well, Mike and I talk all the time about the close is so important. We closed above 120, if I'm not incorrect on that. I think it was like 120.07 or 120.17. But it's the highest settlement going all the way back to that spike in March. And this to me is a confirmation of a breakout. It's a breakout of the channel and it's a breakout of the horizontal line. And as Mike has mentioned a couple times with this crude oil chart, we now have a high probability of getting up to that 75% level, which is where, Mike? I think it's 120 something.
We virtually hit it. I mean, it was 120.
Okay.
I mean, I've considered it. Let's see, it exactly was like 120.93 or something, and the high was 120.99. We just didn't hit the other minor harmonic, which was 121.23. But I still favor. I mean, statistically, it doesn't have to happen, no, but it's above 70% that we retest the 87.5, which would be that 125, 90 area.
All right, so let's go into some of the questions that are in there for me, Mike, because there's a few you're going
to
drop.
Jake, World Bank warns global economy may suffer 1970 style stagflation. Your thoughts? Best way to prepare?
Yeah, that's what we were talking about. I'm in the stagflation camp and I'm in the recession camp, which is why I like gold as a longer term investment. I'll actually be talking about this on a Ninja Trader webinar tomorrow. I think we have somebody here that came here from Ninja Trader. Anissa, maybe?
Yeah, Anissa did.
But I'll be talking about this tomorrow, Anissa. That's the subject matter is gold is not an inflation hedge. Gold's actually a recession hedge. Gold used to be an inflation hedge. But when central banks started getting involved in trying to head off recessions and fight inflation aggressively, which they didn't really do in the 70s. Well, they did. Volcker did, right? But gold is a store of value. And again, Anissa, I'll talk about this more tomorrow in detail on the Ninja Trader webinar. But gold, if gold's a store of value, so what are you holding gold for? You're holding gold because your dollars are losing value. When do your dollars lose value? When they lose value through inflation, where you can't buy as much, or when the Fed prints money and central banks print money. And that's basically what's been going on for, it's been 2 decades, Mike. It's for sure been one.
Well, they started
It's for sure been one.
really ramping it up before the. That's one of the things that led to the dot com boom. Remember, we were going to have the Y2K crisis, and they just started
Yeah.
preemptively flooding.
Yeah. Flooding us with cash. So that's when gold became less of an inflation hedge. And if you think about it, because when they're fighting inflation, there hasn't been any significant inflation until now. So when the Fed went in to hike rates and try and head off inflation, they were now preserving the value of your currency by having fewer dollars be out there, right? So restricting the supply of dollars, which made your dollars more valuable, and the inflation wasn't sticky. So you ended up with gold not working out, if that makes sense. We were in the same shirt.
We're wearing similar colors. You copied me.
I did.
You
I saw
probably,
you were wearing this. I ran and
yeah, you
changed.
probably watched the
All right,
live
what else
stream
do you
from earlier today, and you're like, I got to match that genius technical analyst.
The maroon analysis shirt.
The
All right, what else
moron
we got?
analysis. It's my moron analysis shirt. Uh,
Mhm.
if skilled fund managers and most investors benchmark their diversified portfolio returns against the S&P 500, is an argument against going all in S&P.
So I'm not sure of your reasoning for connecting those two things. So I'm going to speak to that a little bit, and maybe you could put your reason for doing this. Basically, what I think you're saying here is Ed Vogel. What Ed Vogel said is that you should never be in hedge funds. You should just index. So Ed Vogel passed away a bunch of years back, and I used to get mad that CNBC would have him on the same day that they had a show called Fast Money, because Ed Vogel was all about just leave it alone and buy the indexes and don't look at it until you're ready to retire and you'll make money. I think that's what you're saying, George. In essence, why am I actively trading if the hedge funds are I'm not sure if this is what you're saying. If hedge funds benchmark to the S&P and most of them underperform the S&P, and most of them do after fees, then yeah, if you think you can't beat them, what Mike and I say is that a certain portion of your active investment portfolio can beat if you have a risk first look at things. Part of the reason that hedge funds don't outperform the S&P is because stupid ass financial channels like CNBC consider outperformance to be I made 6%, you made 5%, I outperformed you. When really what hedge funds used to do is, and that's why I said Investa is actually a true hedge fund, is they outperform to the downside. In other words, true hedge funds will be doing better now that we're in a bear market, right? So, yes, if you don't have time to manage risk and do active trading, then yes, you should just index. But it's not because the hedge funds benchmark to the S&P. That's not the reason. You can beat hedge funds and you can actually beat the S&P if you are risk first and you take outside risks with a risk first approach. So I'm not sure if that made sense right there, but you don't risk more than you can afford to lose, and you take outsized risks with that particular portion of your portfolio, you can outperform. We've done it in the past with the stock think tank, both up and down.
And for example, when I get long term reentry signals, you can take a portion of your investing funds and just put it into stuff like the SPY, the Qs, and then which is real easy because then you don't have to roll, or you can put some in futures. You just have to roll it, but you can put a portion of your stuff into that. So hey, you're gonna match the long term average, and then you can take another portion and dedicate it to more active investing. like
Hmm.
swing trading, and you can do
Right.
options trading around swing setups and other stuff. But for some people, that's not appropriate. Some people should just park it in some longer
Right.
term things that are indexed. Or, again, one of my favorite strategies also is if we're in a longer term bull market, once you get a longer term bull signal again, hey, I like to look at I like to do sector rotation, and you put it into the top 3 and 4 sectors. You put some in the SPY or some of the Qs, or divide it, and then put some into some of your outperforming sectors. And you can do some stuff when I do sector overviews, but you can say, okay, I'm dedicating X percent to 3 or 4 different sectors that are in outperformance mode. So there's a number of things you can do to even besides just buying the spiders or the cues to even use passive investing techniques to outperform or at least at perform and have the opportunity to outperform the broad indices.
I want to reference back to something Mike said. He said, "Hey Bob, I'm just asking when it happens so I can buy the dip." I think it was in Bitcoin he was talking about. I can't see it
Right?
on
Yeah,
the
I'm
chat
asking
here.
so I can buy crypto for my long-term investment.
The answer remains the same, John, even though you said LOL at the end of that. We can tell you when it's happened, but not when it's going to happen. We can give you a high probability, okay, what's the phrase I'm looking for? A high degree of confidence, more than 50%, that it has currently happened when it does happen. But we can't tell you when it's going to happen, if that makes sense.
And by the way, just as I would not put, I can't give individual trading advice, nor can Bob or investing advice. But from my
Right.
personal perspective, I would not dump everything into crypto as a long term investment.
Right.
There's too much stuff that still has to flush out of the crypto marketplace, and we're nowhere near a long term buy
Mm-hmm.
from my personal perspective.
Agreed.
Because I mean, even you see some more of this stuff start to unravel, and we start getting another major down leg, and you start to
Yep.
see a global recession. A lot of these junk backed stable coins are going to blow, and when they
Mm-hmm.
blow, the stuff disintegrates because the money
Yep.
just goes poof. So, is it a great time from my perspective? No, you could trade it, but everything in crypto right now is a trade with even riskier assets than you'd put into the Nasdaq. See, I consider the Nasdaq a riskier like the Qs are riskier than the spiders to me,
Yep. I
and
agree.
crypto makes the Qs look like a risk off asset. So that's where you can allocate a portion of your funds. But would I be telling anybody, take your long term, you're going to put this away for retirement, just put it all in any one asset? Just like the people who say, I'm all in on this one stock. Uh, what happens if there's a problem with that one stock?
Right.
Then you've put all your eggs in one basket, just like all the people who say the only thing I'm putting every dip I'm just buying Tesla because one day it'll be worth $1 trillion. Well, what happens if there's a problem?
It was interesting to see. We keep talking about how Bitcoin and the Nasdaq have such a high correlation. It was really interesting to see today Bitcoin negative with the S&P positive for a lot of the day. I'm sorry, the Nasdaq positive. Nasdaq turned positive, finished up by about 60 basis points, about 0.6%, and Bitcoin stayed negative. At one point, the Nasdaq was up 1/3%. Bitcoin was down over 4% at
Yeah,
the
and
same
then
time.
Bitcoin got the
Yeah,
big
it got.
snapback rally again off the double pattern,
Mhm.
and then just a big snapback rally. But I'm telling you, behind the scenes with a lot of people who really follow what's going on, there's so much wash trading going on in the cryptos right now, and they're pulling out all the stops. A lot of these exchanges are just completely allowing wash trading, and because it's not regulated, the underlying is not regulated, so that's where you can get, and the more tenuous stuff gets, the more that hey, let's just wash trade it back up.
Mhm.
And it's getting very interesting out there. Hey, John asks, everyone thinks CPI on Friday will be lower than expectation. What's your opinion?
I think it could be slightly lower, but I wouldn't count on it to change the trajectory of the markets because lower is so relative. I mean, if, again, I've said this before, right now I'm seeing the expectation being at year over year on the headline 8.3, the core year over year 5.9, core month over month 0.5, and headline month over month 0.7. I could see us being at 8.1 on the headline. I could see us being in having the core 5.7 or 5.6. Those are still horrendous numbers. And understand something, and this is something that's a little bit different, which has kind of pulled me away from my core belief that the Fed would only mildly claim to handle inflation, or claim to be working against inflation. The White House has made it very clear and has continued to release talking points that inflation is the Fed's problem. They keep saying it over and over again. And I really do think going into the midterms, this is a realization that there's nothing they can do about it. And really, there's nothing the Fed can do about it. So it's scapegoating, which both parties do. I don't want anyone thinking I'm a Trumper or a Bidener. It's scapegoating. And now they're on it. It's like the Fed's handling inflation. Nothing we could do about it. It's Putin's inflation. The Fed is after it. And there's a certain amount of truth to that. But also, when you look back, and it's more of the politicization. Can you say that word for me, Mike?
No, I can't. Politicization.
Politi- Politicalization?
Yes,
Politicalization? I don't
politicalization.
know.
There you go.
The politicalization of the Fed, first in not hiking rates when they should have last May or June, because Powell was waiting to see if he would get reappointed and then waiting to see if he could get confirmed, my opinion. And now the White House basically saying, look, the Fed's your problem. Even Janet Yellen said it the other day. She said the inflation is the purview of the Fed. It's the area of the Fed. They're independent. The Fed's independent. The Fed's independent. It's one of those Shakespearean "thou doth protest too much" kind of situation. So that down the road they can say, well, we don't have anything to do with inflation. It's the Fed. And at its core, I agree with that, except that a lot of the stimulus checks that went out when they shouldn't have were part of the driving force of inflation in the first place. So I don't know how to find those things in the Discord, Kalan.
I like riches, and Bitcoin is the head of what? Criminals?
Yes.
That
Next
is a
question.
true statement. Um,
Next question.
Waka Waka says, Bob, do you have the view that we are going to experience a far worse downturn versus 1929 plus 2008, 2001 combined? I personally think it's going to break the camel's back. Dollar sign.
Yeah, it's hard to answer that, Waka Waka. I think it's going to be worse than the pandemic downturn. I think it has a chance of being worse than 2008. I don't know about 2001. I don't know about 1929. I would say it's going to be worse than 2008. But I don't think that's this recession, because I still think when this recession comes, the Fed will back off. The midterms will be over. I think they'll back off a little bit at that point because they'll be under too much pressure too. But we'll see.
Then,
Especially if it changes from a Democratic Congress to Republican Congress, the Republicans will be all over them to stop with the hiking of rates and kind of let people so that they can then claim victory over the. It's ridiculous.
yeah, but
Sorry, it's
everything's
ridiculous.
being politicized now, and then the next, what you've talked about before, if they don't nail
Politicization.
if they don't nail stuff now,
Yeah.
we're already at the mother of all bubbles.
Yep.
You blow it again
Yep.
bigger, something will unravel at some point that there's no stopping.
Yeah.
And that's the one I
That
don't
would be
want to
the one
see.
that could be bigger than all of them.
Yeah. When it's just like, okay, when you sort of hit that domino that does a cascading effect after you spent like 3 weeks setting up your domino thing, and then you're one away, and then all of a
Yeah.
sudden, boom, it just all goes. And you can't stop it once it's started.
Mm-hmm.
John, you think gold will have one more pullback before going to the moon? What's the good price to buy gold and silver? Again, I've talked
That's a
about.
Mike question. That's a
Huh?
Mike question.
I have to do gold and silver around the core position because the timing is so hard. Because again, as I talked about on with Jim Iorio, first of all, the futures are cash settled, which
Hmm.
makes the over amplified moves into settlement prices, shall we say, very questionable because you look at what's going on in the spot market where it's gold physical, you're trading physical metals versus what's going on in the futures markets for both gold and silver and even sometimes copper. It's very, very different. So the only way I can handle that is to go and trade it around the core position, which I've talked about many times. And that's where when you get high probability like patterns like a double bottom, you take advantage. But I still like to, because, when it breaks out, that's when you stop trading around the core position and ride it. Until then, it's harvesting price action. Uh,
It was that the Discord question down at the bottom. I know I'm
I don't
jumping
see,
around, but
let's see.
Kalan Hawaii, I think he went and took his
Was the
Discord
question,
question and put it in the chat.
is this the question, Kalani? Will inflation force Biden to lift the Trump tariffs on China and the Shanghai lock? Is the Shanghai lockdown has anything to do with it?
So, yeah, it, yes, okay, it could force tariffs to be removed. Absolutely. The interesting part is they haven't removed them yet because, and this is a little bit of a political statement, but it's not an opinion. Okay. Democrats were very much against the tariffs when they got put in place. And then when they got in office, they didn't remove them, they didn't lift them. And I think there was an acknowledgement that they had some effect. I don't care what the effect is, but there was an acknowledgement that they had some effect. But the answer is a simple yes. It could force the lifting of tariffs. Now, the Shanghai lockdowns, they're rolling those out now, and it's part of the reason crude oil is spiking, is they're removing the lockdowns and starting to try and go back to normal. But they have not disavowed the zero COVID policy. So that means they could go back into lockdown. But I don't think it's a tool to try and get tariffs removed. I don't, because the tariffs are mutual right now, and we've been existing in this sort of bubble of tariffs now since about 2018. Um, the steel tariffs, for example, those would likely be need to be lifted mutually to have some sort of effect. I don't think China is basically destroying their own economy to get tariffs removed. So I think that's what you were asking me. But yes, I think the tariffs will be removed and inflation will be the reason.
Hey, I got to put this one up here. Hey, Mike, saw the podcast you guys did last Friday, and I finally understand what double top looks like. Thanks for the education.
Love it.
We got the Jim Aerial podcast. Again, check it out if you haven't already. There's lots of useful technical analysis information in there, even if you don't trade the futures. There's lots of
Yep.
learning. That's a really fun show to do.
Mm-hmm.
Hey, Dan Jet. Hey, Dr. Michael. Glad you're here. Here's another one. Look at this, Bob. Refreshing to hear actual intelligent insights from a market channel. Most on YouTube focus on entertainment. Thanks for the hard work, guys. Well, thank you very much, Brian.
We appreciate that.
That's what we're here to do. We're not here to pump and dump things. We're not here to yell fast money and da 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 da. You know what? We're here to actually provide useful information and really good technical analysis. Uh, hey, Lori.
Hey, Waka Waka, I'm looking at a couple of news stories that are listed as 2 hours ago and 6 hours ago, and it says Biden is not lifting tariffs. So if you think he's already lifting them, I'm not seeing that. I
It
haven't
was only
heard
on
that.
solar
And
panels. Solar panels.
okay. Um, he's pushing to
Yay!
lift them, according to the New York Post. According to CNN, he is weighing lifting some Trump era tariffs, but he has not yet, as far as I can concerned. Sorry, I'm sorry about that, but I saw that.
So Waka Waka. So you really think lowering rates would take precedence over inflation?
So okay, so when the Fed stops, I don't think they'll lower rates. I think they'll stop hiking rates. And then they'll basically say the supply chain has to do its work now. That's what I think will be the Fed's excuse. And that is a way for them to throw it back toward the president and Congress to try and get some of these things fixed. I was reading an article today titled Are Rare Earth Metals That Rare? Apparently, we have a lot of rare earth metals in Alaska. Somebody in the article was quoted as saying that's why Trump wanted to buy Greenland. I don't know how accurate that is. But apparently we have rare earth metals that we don't want to mine, and that's part of the reason we've been buying them. Not saying that's going to change anytime soon, but that's a way for the Fed to throw it back into the court of Congress and the president, whoever happens to control Congress and whoever the president happens to be at the time, whether it's Joe Biden, Kamala Harris, or somebody new because it's 3 years from now. I don't know. But yeah, I think at some point the Fed will get way too much heat for fighting inflation as people get squeezed and as stocks continue to fall. And people really tend to tighten up when they don't feel as rich. And that's what happens when stocks fall and their home values fall, is they tighten up and they don't spend. And that's when they'll start getting that pressure. We're already seeing a little bit of it.
I
We're
think
seeing layoffs,
I think we're gonna start seeing stuff
hiring freezes.
faster than normal
Yeah.
with stuff. It's just this inflation and core stuff with energy, food is just bad at this point. I run
Mm-hmm.
out to the grocery store at lunch today, and I'm like, that was 50 cents cheaper last week. Just last week, my bag of crisps is half full. Uh,
Hey, can you throw up that Waka Waka comment? The impression people get is the Fed put will be in.
yep.
Okay, so Raphael Bostic actually said you should not get the impression that there's a Fed put. Those are his exact words. Now, I'm not saying he's not mistaken or he's not lying or he's just saying right now there's not a Fed put. But they're actively trying to make you believe that there is not a Fed put. So take that for what it's worth. But those are Raphael Bostic's exact
Thou
words, Atlanta Fed
protesteth
president.
too much.
Thou doth protest too much,
Yes.
according to the Bard. Novavax halted. That's interesting to me, actually, for a personal reason.
On rare earths, we have several strategic deposits, but they're considered military political assets, so those are off limits, barring congressional approval, if I recall correctly.
There you go. That's an administration thing, and the Fed can then do that. And again, the Fed is trying to give the impression there is no longer a Fed put. You look at their recent statements, and that's why when rates started going up again. Yesterday, we had the 5 year, the 7 year, the 10 year, the 20 year, and the 30 year, all above 3% for the first time since early May. They fell back a little bit today. I believe they rallied in toward the close in terms of yields. But the Fed is actively trying to tell you there is no Fed put right now. I don't care what the impression necessarily is. They're actively telling you that there's not. Now, whether they're lying or not, I don't know. But the impression right now is and again, the administration is out there saying inflation is the Fed's problem. So be careful thinking there's a Fed put right now. There may be, but be careful with it.
Looks like the next stocks to watch are the EVs with all the fossil fuel getting banned. Opinion on it? Well,
I wrote an article on that for CME Group in their open markets area. Go to CME Group. Actually, Google CME open markets and type my name in. You could read my opinion on it. It's that it's not cheap enough yet. But I also did that article when gas was 4.59 according to AAA average, and electricity was 13.48 cents per British thermal unit, and both of those things have gone up. So
with people getting laid off, are we already in a recession?
So no, a recession has a definition, John, and that's a great question, by the way. Um, Stagflation needs layoffs, just to be clear on that. But a recession, the technical definition used to be 2 consecutive quarters of negative GDP growth. That changed to whatever the National Bureau of Economic Research says is a recession after it happens. Now, I'm going to go with 2 consecutive quarters of negative growth. I'm going to stick with the old definition that I learned. We had a quarter of negative growth last quarter. So we could already be in the old definition of a technical recession, but we don't need layoffs for a recession. We need layoffs for stagflation, but we don't need it for recession. I would suspect that if we have the 2 consecutive quarters of negative growth and jobs don't actually reduce, neighbor won't classify it as a recession. I would suspect that'll happen. But
Here's your GDP now forecast just from today.
what
Don't
is
like
it?
the trend line on that one.
It's an ugly trend
I
line.
mean, that's back below 1%. Could it technically be negative by the time it releases? Theoretically, that would hit the recession definition. But if this one prints positive, the earliest then you could get, if they're still going off that old, if they were to go off the old definition, would be you'd need third and fourth quarter to both be negative, which means they couldn't officially call a recession until the start of the new year. If this one
Mhm.
prints positive, if this one prints negative, we're already in a recession.
Right.
So that's my 2 cents. We're just had that up there. Raj, returned a pasta sauce that was wrong kind. The price I paid was $7.50. After returning, I passed by the shelf at the same sauces and it was $2 more expensive than I bought a week ago. You should just offer
All
to
right.
sell it to somebody for a, huh?
First of all, shame on you for buying pasta sauce at a grocery store. Shame on you, Raj.
No, no, no.
Shame on you.
Not everybody is Italian and makes their own pasta sauce, Bob. Not
It really
everybody.
depends on what the sauce was, Raj. Depending on what the sauce was, I can send you a recipe and you could save quite a bit more than that.
Oh, you just like not everybody can drive a Ferrari, okay? So
Everybody has the ability to drive a Ferrari. They just can't.
no, there are a lot of people who don't know how to drive stick shift anymore.
Yeah.
And if you're buying an automatic transmission Ferrari, I'm sorry. I know there are. You got the paddle shifting now. Yeah, well, yada yada yada. But you know what? I want the old school Ferrari.
With a gate shifter in it.
Yeah.
Yeah, that'd be fun.
See. Uh People asking questions like they did back in '08. I hear people asking about ways to save money on gas. Yeah, we've the top stuff was over. So I passed gas stations today. The super over $6 here now. Uh, if we say walk, isn't blaming Elon for everything if we hit stagflation.
That's great, Waka. I love that. That
We'll just blame Elon on
was
all
Waka.
the world's
Let's
problems
play
now.
me.
I wonder, is there stagflation on Mars?
There is. Currently, there is stagflation on March.
Uh, Stagflation much worse than recession. Typical duration. Thanks in advance from Dr. Michael.
What's that? I'm sorry.
Stagflation much worse than recession. Typical duration.
Yes.
Yeah,
Yes. Stagflation is worse than recession because what it actually is, Dr. Michael, is it's rising prices and stagnant economic growth, which includes layoffs. So people have prices that are rising and they have less money because there's less economic growth. So they're losing their jobs, their house price is going down, their stock portfolio is going down, and prices are still going up. It's to me the worst of all economic conditions for the individual is stagflation. It's horrible. We had that in
Oh,
the 70s.
okay. Raj can make curry, not pasta sauce, so he's off the hook. He makes his.
Raj, if you can make curry, you can make pasta salad. I think curry's harder.
Rich is done.
Oh, kick him out of the room. That's
Hey,
it.
you're
I've had it.
you're you're close, Rich. Uh, Super simple to make and far better taste to make it yourself, plus super cheap.
Yep. Yep.
Uh, oh boy. Uh-oh, you're going down the wrong road with Bob, Mike, leave Ferrari out of it. Hey, I'm
Thank you,
agnostic when it
Ted.
goes to Ferrari. I'm agnostic.
Thank you, Ted.
I'm agnostic. Boy, everybody's musky recession worse than stagflation. You guys are bad. All right. And anything else, Bob? Before any other. Uh, so fun theoretical question: what's the proper response to stagflation?
In terms of investments, you want value stocks that pay dividends. That's really what you want. And you want gold. You want
And
precious
you
metals.
want true value stocks because there's a lot of stocks in
Right.
the value category that aren't a good value yet. So just because
Right.
people might call it a value stock, I've seen value stocks with PEs of 39.
Yeah. So, yeah, you want dividend paying value stocks that are actually values.
Are
You want the dividend to survive any more downturns.
And what's the problem if you were in charge of the Fed? What's the proper response to stagflation? Not from an investing.
Ever in charge of the Fed?
Yeah.
Well,
Bob,
first of all, I would have no part in economic growth if I were part of the Fed. Now, the problem with the Fed is now they have a dual mandate. And that dual mandate, they should have rejected that when it was proposed by Congress. Their job is price stability, which they've failed at that by any reasonable metric.
what
Okay.
this is
And then
this
their
isn't
second
price
mandate
stability?
is exactly. Their second mandate is maximum employment. Now, achieving maximum employment and price stability in stagflation, not happening. So, the number one thing you could do is control inflation during stagflation. So, you want to get inflation under control, as painful as it would be. And that's probably the mother of all credit bubbles that Mike's talking about, because that would be the trigger for it, is the Fed agreeing with me. So things need to go back to zero, and going back to zero is going to be awfully painful for investors. And I don't know if the Fed has the wherewithal to do that. So, yeah, that would be it.
You know what? If the Fed doesn't do it at some point, things have a tendency to do it themselves if they get there's
Waka
always
Waka
that
is the comment of the day right now, down
the
at the
black
bottom.
swan. Yeah, dual mandate contradicts itself. I think you know
Yep.
and I think it should have been price stability. So,
Right. Silly.
yes. Uh, what is that a question? Gold and silver miners? I mean,
Well, I would rather buy gold or silver because the companies have just as much problems as other companies do. I mean, the commodity that they sell will be going up, or that they mine for will be going up, but they still have problems that other corporates have, problems with rates, problems with lines of credit, problems with investment, capital expenditures. So for me, it's always like, if you can't do it in a futures account, the micro gold is a big help because you can do these tiny positions in a futures account. You could do it in something like PHYS, which is the ETF Mike and I like,
mm-hmm.
or you could actually buy gold coins. Okay, that's what you could buy, gold and silver coins.
Yeah, this is my favorite. If you're trading around a core position, I love to trade PHYS.
Mm,
Anything Sprott. Look for Sprott. And I wish they would have
right.
listed the Sprott uranium in this country because
You know, right?
did you see? I mean, uranium's another fantastic one to trade around the core position.
Yep.
And this is why, because at some point uranium people oh, it's way off its lows. Yeah, but here's another one I love to trade, especially with what's going on in the energy markets. With you got more and more countries going, we're going back to nuclear power, and look,
Mhm.
you think uranium doesn't have room to
Mhm.
run, but
Right.
here's a great lesson why it's traded around a core position, because you can harvest this price action. You take whatever your overall position, subdivide it into sub positions, and you put it, I like to do it at the harmonic levels, and you harvest the price action back and forth. Then and this is a great example because it's easier to demonstrate versus gold. Then it like if it breaks above 3150, guess what? I'm holding on for the ride.
Yep.
Meanwhile, it's gone a whole bunch of back and forth over the last wow, since over a year, but you can harvest the price action. And
Rich,
it's
what's going on with Novavax? Mike, can you put up an NVAX chart real quick? I can tell people the story as to why that
where
interests me, but
where is it?
Nova.
N-
No, it's NVAX, isn't it?
It's NVAX. There it is. It's
Yeah,
not one I look at all the time.
that is just ugly.
Where that is an ugly chart overall, but where's it trading? What's
Well, it's halted according to
oh
Rich, but I don't know if it's just halted in the post market, if it's halted before the close or what happened. I don't know.
let's see what the extended trading did. I don't
There
know.
are some television celebrities that I know from Chicago. Not on a call them on the weekends kind of basis, but when I see them, they say hi. We have drinks. They're nice guys, and they asked me a long time ago what I thought of this stock, and I told them that I thought it was a bit of a trap, to use the wording. And I said, if you guys, are you guys in it at a good level? And they're like, we're in it at like 120, and it's doing great. And it's up at 200 and something, and we think it's going higher, and we think it's going higher and higher. And I was like, if you're in it at 120, take your money back. No, I think we're going to buy more. And I'm like, okay, but I always love it when people ask me, and they go, no, we don't think we should do that. Okay, well, don't ask me. But it just has been on a downward spiral since the last time I talked to them about it. And I think I know these guys well enough to know they're probably still in it. No, they're not athletes, Dr. Michael. There are a couple of NBC shows named after Chicago. They star in one of those.
Hmm.
I used to go into my wife's restaurant all the time. So,
FDA advisors recommend the authorization of COVID shots by Novavax.
okay. So they may get a little bump out of it.
Is
All
that
right. What else we got? Anybody?
Chicago Bears? Question mark.
No. There are several shows on NBC named after Chicago. They star in one of those shows.
So,
As far as I'll go with it.
all right, with that, let me just get all. I think that's about it. So you might have to, if you have time. I don't know what your schedule is. I know you're going to be back on Thursday, but you might have, if you have the time, be able to pop on Friday morning, even for 5 minutes. CPI.
Yeah. Yeah. I can
I'm
pop
just
on for
letting
sure.
people know because then they can plan their whole week around your appearances.
Whatever. Yeah, no, definitely. And again, I think it's going to come in a little bit lower than expected, and it'll help the markets at first. Remember, Mike and I are looking for those doubles to play out,
Yep.
but it's not going to help the overall environment from a medium to long term perspective. So,
And I'll leave it with this, Rich. Just kidding. Ferrari is the best. You're flip flopping worse than the Fed.
all right, we'll let that go, Rich.
Again,
Ted's on our side now. That's all I
we
care
don't
about.
ban people from this unless you're spamming the channel. There is no banning here. It's all right. Let me get back to
All right.
the anti Bob button, making Bob disappear. All right.
Cheers, guys.
See ya. Hey, everybody. There we go. The PTP Apprentice Show. Well, I hope everyone is enjoying it. I hope you're enjoying. I'm just going to go over real quick. Again, we got that bounce. We did not in the S&P did not break below the lows. We had a couple pretty nice trades. I wanted to just point a couple things out. I talked about this here. Remember, this was halfway decent ignition off the open this morning. And I just wanted to show you a couple things again for newer people here. What I like to do is off the ignition, you watch for the area 50 to 62 and a half, and then I watch for the rotation up, and you can keep a stop below the 62 and a half on a closing basis. So pretty good ignition there, pulling right back to that 50% level and then taking off. Again, as I talked about, the second leg is generally the best trade right there. So that's a little key thing. You got a little nice double in here. If anybody spotted it, that was a little nice double play in there. And then it just kept going and going and going. But I just wanted to recap that little ignition play because, and then you can step aside. I got a couple trades in the bag, and you don't have to force stuff. By the way, on this retracement from the highs on the 2nd of June to the lows today, we're back above. See how we paused really nice, which was this was a great intraday profit target, the 50% level. You see that really nice pause. Then we went above the 62.5 on the closing basis. So statistically, what am I favoring? 41.75. Does that mean it can't pull back before then? But that's what I'm watching for. A continued move to 41.75 to then 41.88. Overall, we're still in consolidation, so we'll be able to fine tune this with some price action. If we do pull back tonight, when Asia and Europe opens, my key support level is back at this 50% level with the rising 1 hour rotation zone about 41.32. And then the next support 41.18. If we break below 41.18, that would not be good for the continuation of this at least short-term rally. So those are my key levels I'm watching for the overnight trading. And then we're back to, remember, we get much higher, this doubles off the table. So then we don't have a potential double top. It's getting to more of a sideways channel anyways. It's technically not invalidated. What happened to my double bottom targets? The double bottom targets still up here to play out. So that's where we sit. NASDAQ, here's what I was talking about that I was afraid was going to happen on the open. Not really afraid, but this is what I was talking about. You see this quick down flush move right here? That just snaps back, and you saw the momentum bars there also. So that's the little quick play. Again, this was the low there to this spike high. Pull back to the 50% level. You watch for that rotation up, stop below the 62.5, and there you go. That's your little secondary reaction play I love. Then you also had a double here, reversing that move right there. This actually double top, just it'll play out quick, but then again, it's not something shortable. It was shortable, but not something I like to short because it's more for take profit, little coming off of any earlier trades. So for this one, I still have on from the overall now high to low move. We're stalled out between the 62.5 and 50. On a pullback move, I'm focused on about 12,600. We did not get the close above the 62.5, so statistically we don't have that favorable move back to 12,880. So I'm keeping a closer eye on the NASDAQ. Could not get above the 62.5. If you were going off of this little one, just to show you, we closed above the 62.5, stalled out at 75. So this still favors slightly higher price action, but this one is more important, this whole down leg. So the key levels I'm watching for a return to about 12,744 on the overnight rally, and then a close above that should at least put in statistically the moves higher. For the Dow, again, this one's nearly off the table. Also, will probably be off the table tomorrow. But this was the key. The key major move is still from this, but I'm just targeting above 33,206, about 33,280, then above 33,280, you return to the highs. You can see this is getting really sloppy into one more push higher. That one's off the table on a daily basis. So that's what we'll have to look at. Russell, you can see here, Russell's still marching along. Russell hit the first target today for the double. So Russell double triggered on a closing basis. You got the pullback move to the break, and then it's propelled higher. It pulled back again nicely to the rotation zone, but the first target is officially hit. So I'm expecting it. My next major target is 1949. Why? Because of this flat top here. This is still technically the move that started it way up here, but with this flat top area, 1949 is my next major target on there because it's still within the weekly rotation zone. Does that mean we can't hit the final target? No, it's just I'm favoring this much from a trading perspective more. Crude, we touched on earlier a bit. We just had this little mini double that was just a mess today. It turned into just this horrible thing. I'm just watching for another retest of this key high area, and then we get a close above the 75% harmonic for the chug on higher. It's trying to work off this overbought condition, and cycles are at their top. So I'm not chasing stuff as much if you don't already have a position. What else do we want to talk about real quick? Notes, again, strong bounce. Remember, we got the close below 62.5, favors 87.5. Strong bounce off of there, but I'm still watching this rotation zone. When I start getting more bullish again is about above 119.13, and we could still trigger an aggressive percent B buy, but I'll let you know if that would be on a close above 118.23.5 tomorrow. Dollar index did not close into the double, so the double is confirmed but not officially triggered on a closing basis yet. What was interesting also with the VIX, with these rally backs, even though we didn't take out the most recent swing highs, the VIX dropping below the most recent swing lows. So this move does favor more upside ahead. I just wanted to point that out to everybody also. The only concern I'm getting is cycles are getting to the bottom on the longer term thing, but we could easily make another push down. Tesla, just I'll recap this too again for the gap plays. The gap play, again, you go from the close to the lows. You get the close above that 62.5 right here. Even with pullbacks, statistically high probability favors the gap fill play, and that's what we got. So that was the only short-term play with that today. We'll just do the levels for tomorrow morning with Tesla because it's been a long show today. Let's see where we sit. Thoughts, where do you see it topping Coinbase 3 to 5 years long term? What do you mean, Chris? Where do I see Coinbase trading, or where do I see cryptos on Coinbase? Hey, Raj, thank you so much for the super chat. Again, everybody, big shout out to Raj. Thank you. Dr. Michael already gave you the shout out. Fantastic. Do you think we'll have a lockdown just like China? No. I think there would be riots in the streets. I think I agree. I think it's been given up. Let's see. Chechen leader Ramzan, I can't say that name, says he plans to defeat not only Ukraine but other worthless European states. Wonderful. Thanks for that good news, Rich. Sounds like World War III soon. Yeah, that's what I'm worried about too. But happy news, $20 super chat from Raj. Chris, again, let me know what do you see with. I am actually really worried with cryptos. I've said this before, and if cryptos go down, Coinbase is gonna get absolutely destroyed even more so than it is. And if you noticed, they're talking about the HFT front running ban now. Has anybody paying attention to that? And you know where all the HFT guys are going to go to crypto, and it's going to get really even more interesting than it already is. So, with that, I'm going to call it an evening, gone over an hour already. So I will be back tomorrow at 8 a.m. Remember, let's check on the news for tomorrow. Let's check on, sorry, the economic calendar, not the news. So we got mortgage stuff coming out early, which I'm expecting still contraction in that. Wholesale inventories at 9 after the uh, open, which will be interesting based off of what targets said today with inventories creeping up. It'll be interesting to see how the wholesale inventory numbers. Crude, remember, crude big numbers tomorrow. So that's going to be very, very interesting. And then actually, the 10-year note auction will be interesting based off of what the shorter term auctions did. All right. Uh, can you check TTD? The trade desk? I I can. Uh, it does now. There was that little double that played out from long ago. I don't trade this personally. Uh, but you do technically have another double pattern here. So you get the close above what's that high? 55.28. Is that I think I got it on the right one. 63.21 stop reduction right near this shelf. And also you hit the first target closing basis. That triggers a 62.5 also. Then your next major cluster, you see 75 and the next double target right around 67 and then 71. That could be an interesting upside trade. I'll have to take a closer analysis. I don't trade that one. You are welcome, Waka Waka. You are welcome, Dr. Michael. Weekly double, yes. That was I didn't see. I started analyzing it before I saw your comment. Weekly double. It's a daily double. It's the daily double, and you can see it on the weekly. It is against the weekly rotation zone, so it's slightly lower probability, but it's definitely tradable. Especially if we rally, if we get a move on with some stocks over the short term. You are welcome, APU's World. Thank you for being here. Thanks for the comment on the great stream. Thank you, Raj. Again, thank you. Big shout out, everybody, to Raj. Give him some kudos in the comments for the super chat. And again, anybody else, that's a great way to support the channel. And we provide all this information for free. You know, we don't get pretty much don't get crap from YouTube besides if people do the donations. The ad revenue is absolutely pathetic. So that's not where it comes from. It comes from the donations, and we like to keep this information completely free. And people like Raj keep it going. And I know Lauren has a lot of super chats in the past. And again, so everybody, Kalani does it. Anybody who wants to support the channel, it's a fabulous way to do it. And also, if you don't have the money or the wherewithal to do that, please then come back and leave some comments and like the videos to try to get it out there. Look at all the new people we're getting. We're helping people one live stream at a time. With that, I will talk to everyone later. Have a fantastic evening. See you back tomorrow morning. Bye for now.